Hi everybody, Phil Strong here again. Thank you for joining me in another video blog. It's great to have you with me today. Today what I'd like to talk about is investment property mortgage. Why would we talk about this when we wanted to get debt free? Well, my first point, I've got 5 points. My first point is that an investment property is a great vehicle to help you to reduce your debt. And now how does that work, I hear you say, because you certainly don't have $200,000 in your pocket to go and buy an investment property. Well, most people don't. So an investment property is a great way for you to reduce your debt. How do we do this? Well, here's what I did. What I did is I bought several investment properties, put them in place with tenants and managed them myself so that the cash flow was covering the debts and helping to pay all the bills. Then what I made sure that I'd done when I was buying them was to buy in an area that I knew would slowly appreciate in value. So fast forward 5 years, some of those properties I was able to sell and use the capital gains after all my expenses. The capital gains from those properties helped me to pay my own mortgage off. And this is a fantastic way to do it, and in my book, if you've seen it, you'll hear that an example of just taking $30,000 and putting it into your mortgage can have a significant result in reducing your interest and accelerating your debt repayment. So my third point is this: don't pay your investment debt off as a priority. If you have an investment property, put it to one side, make sure it's self-funding if you can, and then continue to use the principles that I teach to pay your own mortgage off as fast as you can. That is your priority, because that interest, my friends, is usually not deductible, which means you can't claim it as an expense against your income. Now the third principle, fourth point I'd like to make with regards to this, the fourth point that I would like to make regarding this is to use that rental income that's coming in to offset against your interest. So go and visit one of the other video blogs on home equity loans, line of credit loans, and see how you can use income to offset your interest costs. And if you do this with rental income that's coming in from 1, 2, 5 or 10 properties, you'll see a significant reduction in interest costs, which will help you to build your equity in property much, much faster. So again, I'll put a link at the bottom here, race across to that video blog, and make sure you understand the principle of how you can reduce your interest costs. Now ultimately, my last point, my final point, investment properties. Many people just think that these are a tool to pay less taxes, and if you're doing it for that reason, totally the wrong reason. Here's your goal. The ultimate goal with investment properties is passive income. It's cash flow. So what you want to do is have, let's just keep it real small. Let's say you have 3 properties that you buy that are investments, and after 10 years you sell 2 of them and you pay the mortgage off on your house and the investment property. What that means in this simple example is that you have a mortgage-free home that you live in, and you have a mortgage-free rental property which may be paying you $1,000 a month in income after expenses. Now that's passive income, and $1,000 a month is really going to help you a lot with your lifestyle and growing towards retirement. So remember, the ultimate goal with investment properties is passive income, which is cash flow, which is the key for you. So I hope that's helped you today. Don't forget to check out the other videos that will help you to increase your understanding, and I hope you have a great day. See you soon.